Hello everyone, my name is Anil Gupta. I'm the mortgage broker dealing in home and investment loans, and also I deal in commercial and business and asset loans, and help people with finding with the best rates on the refinancing with the loans. In this short video, I will try to explain what factors determine your home and investment loan interest rates. And a couple of points before I proceed with this video. This is the general information only. And for any specific and personal information or your situation, please seek a specialist advice. And one more point that there may be more factors outside these factors which I present. So it's not these below factors are not the only factors. There may be more factors. Let's start with the factors. The factors deciding your interest rates. The LVR, LVR, the LVR loan to value ratio is the most important factor which decides the interest rate you're getting from the lender. The LVR is calculated by the dividing loan amount by the property value, and lower the LVR is lower the risk for the bank. That's why if the LVR is low, bank offer lower the rate. And sometimes I mean, it can be a big difference. It can be a difference up to 30 basis points. It can be a difference at least 20 basis points, 20 to 30 basis points when the LVR is above 80% or below 80%. And it can be a massive difference, maybe up to 70 points, 60 points if the LVR is 95% and the LVR is below 80% or 70%. So when the loan amount is below 70% LVR and higher than 95%, the difference can go up to 1 full percentage, 100 basis points. So LVR is the most important factor which plays very big role in the interest rate which banks offers you. Other than that, the other factors other than the LVR is the loan amount. Higher the amount, better the rate. So for example, if the loan amount is 450,000 and second loan amount is 550,000, you will get a better rate on the 550,000 over a half a million than comparing to the 450,000. And let's say there is a third amount over a million. So you will get even better rate when the loan amount goes over a million. Another factor is negotiated rate. Brokers negotiate rate with the bank, and they know which banks can offer a better negotiated rate. And you can negotiate with the bank as well, but you can. It's up to you. You need to know more about the which bank is offering which rate. And the next factor is bank's promotion. Sometimes bank promote their loan product in order to gain more market access. Sometimes they offer better discounts. And a good broker should know which bank is offering a better promotion, better discount, and with the product features as well. Another very important factor which decides the interest rate is the loan features. And very quickly, I will be making a separate video only on offset feature of the account of the loan, offset feature of the loan. So if you are going for the offset feature, if you want to have offset facility with your loan, the interest rate will be higher. And if not any particular lender, if not showing the interest rate higher, like if they are offering the interest rate same with or without offset feature, just have a look at their comparison rate. They will be charging another fees on the offset feature. So that makes, like, in one way or the another, offset feature comes with a cost. Next factor is bank tier. The tier one banks offer better rate. Tier two and tier three, when you go next level and next level down, the rate goes up. But they are not for the everyone people. They are tier two and three are chosen by people who want particular type of loan. And that's why when the bank is the lender is taking a higher risk, they charge extra interest rate on that loan. Next factor is desktop versus full assessment. It's little bit hard to explain that. Desktop, when you go for a new loan, some banks they offer only the software processing of the application. So initial application of process on the software only. So that's the desktop feature. And some banks offer full assessment. Then like from the starting point, there will be a person, human being dealing with your loan, checking all the documents. So the banks which are offering the desktop feature only, they sometimes offer a a sometimes lower rate because they save on the human cost. And other banks which offer full assessment, they sometimes charge higher rate. That's the difference. Going on to the other features, like I said, there are heaps of features which decide the interest rates, but these are the main ones, which I think I'm covering them all. The credit score, the better the credit score, the interest rate will be good. But on the other way, if the credit score is not good, some banks don't even like offer the loan, or some banks, when they offer, they charge very high rate. And then government schemes, if you are going with a first home buyer scheme on the same amount, 95% LVR, you will get almost interest rate almost equal to the 80% LVR. So that's another feature, type of repayment, principal and interest, or interest only. Uh, Interest only will always be expensive. Again, the owner occupied difference between owner occupied and investment rate. Investment rate is always expensive. And one very last point, but again, there are other factors in this interest rate. When you check the interest rate, always check the interest rate and the comparison rate. Sometimes the interest rate banks are showing low, but they are charging so many fees on the loan that the comparison rate goes up. So always check the interest and the comparison rate, which helps you decide which rate is better. Hopefully you understand and like the video. And if you have any other question, I have mentioned my contact details there. You can call me or email me with your question, and I will try to help you or answer your question in the best way. Thank you much.